The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.
You're listening to The Money Hour with your host, Tina Mitchell, sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to The Money Hour on 570 KVI, the Sunday, December 1st show. I'm your host and mortgage expert, Tina Mitchell. Thank you for taking time to talk money. I'm here every Sunday at 11 a.m. right here on 570 KVI. I bring in studio each week the best of the best experts in our local real estate market to talk on everything money. Well, real estate, money, everything regarding your finances is what we're here to talk about. I'm here to help you build a strong financial blueprint in today's economy. And guests in my lineup in studio today, regular contributor Lloyd, Hara, King County Assessor. King County Department of Assessments assist property owners and educates them on property taxes and the appeal process. Learn today what's happening over at the assessor's office. And second guest in studio, another regular contributor of the show, my own personal CPA and the CPA for my listeners here on 570 KVI, Greg Nunn Principal at Gregory S Nunn Company. Your federal income taxes. What are the popular topics when it comes to your taxes and what's happening today? That's what we're going to discuss in studio with Greg. And last guest and first time guest in studio representing what's happening in our local real estate market today, Kian and Kelly Pornour with Windermere Real Estate. Again, here to discuss everything that's happening in our local real estate market and things that you want to know about and what the consumers are thinking here in the real estate market. Great information and great guest in studio today. For more information on any topics discussed, please call into the show at 1-888-987-0570. Again, that's 1-888-987-0570 or online at themoneyhour.com. And how about some money chat? A lot of my listeners are calling in. They're on adjustable rate mortgages, asking if it makes sense to refinance to a fixed rate mortgage. And I think what's prompting, well, I know what's prompting some of these calls now is people that didn't have the equity in their home a little while ago that were in a position to take advantage of these interest rates have actually built some equity in their home. So now they've got the equity necessary to refinance or required to refinance and might be able to save some money. Now, to answer that question on whether it makes sense to refinance out of your adjustable, and the reason people are asking that is because if you're on an adjustable rate mortgage right now, adjustable rate mortgage meaning your interest rate is fixed for a period of time. So there's a lot of adjustable rate mortgages out there. There's 1 month adjustable rate mortgages, 6 month, 1 year. Probably the most common that people are in are 5 year or maybe a 7 year, and there's even a 10 year. So on a 5 year adjustable rate mortgage, that means your interest rate is fixed and guaranteed for 5 years. And then after that 5 year period, your interest rate is going to adjust every single year for the life of the loan until you sell or refinance out of that mortgage. Now, the reason homeowners are asking whether it makes sense because their interest rates are actually going down. So as they've been on a fixed rate adjustable rate mortgage, because of what's happening in their index that they're on, rates are actually decreasing. So if we take a look at adjustable rate mortgages and how they adjust, it's based on your index, and the most popular adjustable rate mortgage is based on the 12-month LIBOR. That's the London Interbank Offering Rate. And this week's 12-month LIBOR, if you look it up online, it's 0.58%. A month ago, it was 0.6, and a year ago, it was 0.86. So we're seeing that the LIBOR is still continuing to go down in that rate. So the 10-year average from 2001 till today is 3.16%. So that's what the average of where the 10-year LIBOR, where over a 10-year period, the 1 year or the 12-month LIBOR has been. So for an average, if we look at this week, down about 2.58% from where the average has been, that's a huge difference in how your interest rate's going to be adjusted. Now, I'm going to go through the most recent example of a listener that came in, and this particular listener currently is on a 5-year adjustable rate mortgage that she took out in 2006 at a 5.625% interest rate. So the 30-year fixed rate mortgage was averaging back in 2006 maybe around 6.5%. So she chose to go with a 5-year adjustable rate mortgage. Again, her interest rate would be fixed and guaranteed for just 5 years at 5.625%. Now, in 2006, when she closed on her mortgage, the average for the 12-month LIBOR is at 4.85%. So here's how an adjustable rate mortgage will adjust. And again, it depends on the adjustable rate mortgage that you're on, but there's two different ways that you can see they are going to adjust. Either a 6.2, and a 6.2 means that your lifetime cap is 6%. The 2 represents your annual interest rate increase. So the 6% is going to be the lifetime cap, and that's your first year adjustment. And I'm sorry, the 6.2 is just the lifetime cap. The 2% is the annual adjustment. So it can't go over the 6%. But our more common cap and how that works is actually a 5.25. So a 5.25 adjustment means that your interest rate is capped at 5%. So that's what the last 5 represents. The 2 represents your annual. So again, the interest rate cannot increase more than 2% every year. But the first 5 represents your first year adjustment. So basically for this client, she closed in 2006. The most vulnerable year would be her first year adjustment. So after that 5-year period, her interest rate could go up 5%. Which then again, it would reach its lifetime cap. But after that first year, it can only increase a maximum of 2% per year. So if we take a look at today's index, if her interest rate was going to adjust, and again, it's going to adjust annually every year until she refinances out of this or gets rid of that loan. So if today's index is at 0.58%, depending on where her fixed margin is. So what the fixed margin is going to account for how your interest rate is going to adjust. So this margin is not going to adjust throughout the life of the loan. It's just fixed. It's going to be anywhere from 2 to 2.75%. So hers is at 2%. So what happens is they take the current index, which again, today's index is at 0.58. You add to that whatever your fixed rate margin is. So her fixed margin for the life of her loan is 2%. So if you take that plus the current index, that means her interest rate would adjust to 2.58%, or it's going to actually round up to the nearest eighth of a percent. So if we round that up to the nearest 1/8%, that means her interest rate adjustment today would be 2.65%, 2.625%. A 30-year fix is averaging around 4.25. Now, I'm not quoting interest rates today because it is going to vary depending on a lot of different factors, credit score, qualifying factors, the appraised value in your home. Also, there's, as you know, from being if you're a regular listener to my show, there's a lot of different interest rate options you can choose depending on the cost structure you want to go with. So standard cost structure being a 1% loan origination fee, and your closing costs, that would be about averaging this week around 4.25%. So her interest rate adjustment would actually be 1 3/8% lower than where the current average is going for the 30-year fixed rate mortgage. So really what you want to do in this situation is you want to consider how long you plan on staying in the home. Run the amortization schedule on how much interest you would pay. She had about a $300,000 loan amount. So the interest that she would save in 1 year between the 30-year fixed and the adjustable rate mortgage was just over $7,200. Actually, I'm sorry, it was just over $5,000 in a 1 year period of time. So if she felt that she was going to keep the mortgage for just a couple years and was okay gambling what's going to happen for the next year adjustment, it may make more sense for her. But if you don't think $5,000 is really that big of a deal and you want to take advantage of where the interest rates are at right now, it's a really good idea to look at the 30-year fix, because the question is going to be, where is that interest rate going to be a year or 2 years from now? So if you're looking at refinancing, I just want to give you a quick rundown of preparation for your documents. You want to start gathering everything on your income. That means your recent pay stub over the last 30-day period of time. They're going to be looking for a year-to-date income. Also, you want to gather your tax returns. Whether or not the tax returns are going to be required is going to be depending on how everything comes in with your transcripts and the type of loan that you're going with. But worst case scenario, get your tax returns, all your schedules together, your asset statements, current mortgage statement, and the breakdown of your property taxes and insurance. So that'll get you kind of the beginning process of documents to get started. Again, anything that you hear on the show today, pick up the phone, give me a call at 1-888-987-0570. Again, that's 1-888-987-0570 or online at themoneyhour.com. Do you own a property in King County? What's happening over at the assessor's office? Lloyd, Hara, King County Assessor, right here on 570 KVI. After this short break.
Kelly and Kian understand the urgency of shelter both in their business and in their community. They're here for you not only as exceptional real estate brokers, but also advocates for affordable housing and ending homelessness. They've worked with first-time homebuyers, relocation companies, sellers, and are certified negotiating experts. They're also tireless advocates of Windermere Foundation. Kelly and Kian encapsulate their services in one simple phrase: a home for you, a home for all.
Hi, this is Kian Pornour.
And this is Kelly Pornour, and you can reach us at 206-949-9302 or on our website at kellyandkian.com. That number again is 206-949-9302.
Free electricity from your roof? It's possible with solar energy. Here's Amy from Solterra Systems.
There's never been a better time to install solar in Washington, and yes, we do get enough sun. Incentives cover over 50% of the installation cost, and zero down financing is available. Enjoy watching your meter run backwards this summer by installing solar now.
Go to useyourroof.com to find out how easy it can be. That's useyourroof.com or call 800-865-9005 to get your free site assessment from Solterra Systems.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KBI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour with your host and mortgage expert, Tina Mitchell. Each week, I share expert advice and inside knowledge on today's events and our local economy and how it affects your money. In studio right now, Lloyd, Hara, King County Assessor. Lloyd comes into studio on a regular basis to share the most recent things happening with your property taxes and what's happening over at the assessor's office. Lloyd, thank you again for being here to share your information with my listeners.
Okay, Tina, it's great always to be with you.
And it's going to be a great show. It always is. Lloyd Hara, King County Assessor, is a respected veteran public official. He was elected assessor November 3rd, 2009, and has a record as a tireless advocate for taxpayers and champion of openness and transparency with government agencies. And Lloyd, let's just go ahead and start out. What bills did the assessor's office pass during the most recent session?
Well, we passed two bills that were supported by my office. The first was to provide the opportunity to give electronic notification for values instead of doing mailing.
Wow, electronic now.
Oh, yeah, which is good. This should
save really
us,
good.
This should save us substantial amounts of printing and postage as we move forward. Plus, you get it, obviously, immediately, almost instantaneously. And at that point, then you can move forward with whether or not your values appear to be correct for you. And the second bill was we are no longer required to assess all government-owned property. And
so what does that mean, Lloyd?
And so that means essentially for government-owned property, since it's not taxed, so then why are we appraising it every year?
Sure.
It's just kind of a wasted amount of, in my opinion, wasted energy going there, and we can put our resources in more productive uses.
It makes total sense. So what are the bills that you're going to be pushing during 2014 legislation session?
Well, we have a number. Number one is to change the current law that requires a certification or a letter that's written by a taxpayer who wins an appeal.
Okay.
And so this is for that you want to get your money. And so I'm saying, if you go to the effort to appeal, you get a reduction and your taxes are subsequently reduced. Why would you not want to automatically get a refund?
Sure. And so they're doing this because people forget to file the form, and they lose out on their money.
That's correct. So I want to make sure if you win, you get your money.
Awesome. What else, Lloyd?
Okay, we have a second bill that involves single valuation for residential properties. Now, when one buys a property, you don't separate it out by land and by the improvement or the building that's on there. You basically value your property as a single entity, and I think it raises and reduces the amount of confusion for people when they see, oh, my land went up, but my value also did not go up because my improvement went down. Mm-hmm. But, for all of us, I think it makes it simplified, because if you appeal it, you can't appeal simply the land value or the building value. You can only appeal the total dollar amount. Sure. So why not present it in that
as a total? It makes total sense.
As a total package.
Yep.
And the third thing is to institute what I would classify as a small fee for those that want to appeal commercial values.
Okay.
And the current legislation that we've proposed, we have kind of a sliding fee scale. If you own property that's less than $5 million, you still get the opportunity and the right to file an appeal for nothing. If it's over $5 million, then there is a sliding scale that goes up to recover some of our cost in looking at large appeals. And part of this is to get back on a cost recovery basis, because basically larger appeals require substantially more time, not only within our office as appraisers, but also by the attorney and everybody else that is required to process that appeal.
So, Lloyd, what are the certified numbers looking like for new construction in King County?
Well, for new construction, we clearly are seeing values going up this year. And the good thing is we're seeing around $3.4 billion going up. And so this is an increase. And it's good to see all the cranes in the area.
Yep. The good sign of what's happening in our market and the recovery.
Exactly. So that is a positive to me. I view that as a positive.
Of course, and when they're willing to spend money and start building again, obviously the confidence is building up. How does this year's trends compare to previous years, and what does that indicate for the real estate market?
Okay, our valuation year for this upcoming tax year, 2014, is January 1st, 2013. And in essence, we have 85 areas where we break down the county. We have 83 areas where the values have increased. There are only 2 areas where there has been a slight decrease.
That's really, really good news to hear.
So it's on the positive side.
Where are those areas that had the decrease, Lloyd?
Well, they're primarily what I classify down in the Skyway, Bryn Mawr, that location down on Lower Rainier Avenue.
And what are the rates of appeals currently at for 2013 valuations?
Well, currently appeals have been continuing to drop. This year we anticipate under 5,000 appeals. And I still remember when I first took office in 2009, when you elected me, we had around 15,000 appeals. Wow. So we're down.
So quite an improvement.
Oh, yeah.
And a lot of that's because of the information that they can, the appeal process through the online, and where they can actually see, because I think you've brought this up in studio before, is it really worth your time appealing when the effect, if it does happen, it's such a small dollar amount that doesn't make sense for you going through that process. And it's a lot easier for them as well, right, and getting educated.
Exactly.
For the appeal.
And we're highly encouraged by our e-appeals, what we call e-appeals, which we instituted in June of this year. that a little over 31% of the filers have gone on electronic appeals.
Wow.
Which is great. I would have been happy, for example, if we had 10%, but this has been 3 times as many as initially thought.
It makes it easier for the homeowner. It makes it less expensive for the assessor's office and going through that process, so it's all good.
Oh, absolutely. Plus, you can take, in the comfort of your home instead of filling out all this paperwork and downloading all of this. You can do it all electronically.
Exactly.
And save mailing, too.
It's all good. So you would think, actually, with the appeal process being a lot easier, those appeals would go up. So you guys are doing some awesome things out at the assessor's office that it actually is decreased, even though it's an easier process to go through. So if you're listening and you do want to go through the appeal process or get tons of information that the site has that can be really, really helpful on what is over at the assessor's office, the value of your property, go to kingcounty.gov. Again, that's kingcounty.gov. So, Lloyd, anything else that you have going on that you want to share with my listeners today?
Well, we just completed our open house. I think I mentioned that to you at the last show.
Yep.
And it was good to see citizens come in and understand how our office works. We had a number of workshops and displays, workshops dealing with senior citizen exemptions and also on personal property, but also just going through the office and taking a look at our various applications.
Sure.
So it's been that's been exciting to demonstrate the new technology that we've instituted and see the cost savings that are a result of the new technology that we have.
Yeah. And Lloyd, I think it's always good, especially for any of the listeners that are listening first time or someone that might have missed your segment when I've had you in studio before, in really the breakdown of property taxes and how much is really based on the value of their property. Can you share that with my listeners?
Well, absolutely. State of Washington is one of the few states that's done on a revenue basis.
Okay.
That the levy floats. It is not fixed. So as a consequence, even though property values are going up, say it goes up 10%, that does not mean that your property taxes will also go up 10%, as it does in a lot of other states.
Okay.
And I would be very surprised that if the property tax increased by any greater than 3 to 3.5%.
All right.
Even though your value went up by 10.
So would that be the biggest misconception about property taxes, Lloyd, or something else?
Well, the other element is we have various districts or tax levies where well over 50% of your property tax are voter approved. So that means that you and your fellow citizens have decided to tax yourself.
And that's what you can have when you're shopping for a home. And I have clients ask us a lot when they're looking at one home and then possibly down the street looking at another home. And the percentage of what those taxes are based off in the value of the home are quite a bit different. And so the reason why is they're in a different district. They have different levies that they're voting for their schools. And that's probably why they're seeing that. Correct, Lloyd? That's
correct. It's been also interesting to see where school levies, which are voter approved, which represents a little over 50% of the property tax, supports the K through 12 program. And clearly, people do shop. And as you know, as a real estate person, certain school districts have certain cachet as compared to others. And people are much more willing to pay up for a house that's in a certain district versus another one. Yeah. Even though their property taxes may be slightly higher.
Yeah, I know. I live in Newcastle. Beautiful, beautiful neighborhood. But we're in the Renton School District. And it makes a difference when you're talking. Now, Dave and I don't have kids, so it wasn't important to us. But resale purposes, it definitely is, because it's different when you're buying in a Renton school district versus the Bellevue school district. What other things are the duties are involved in the tax assessor?
Well, we have many, but one of the things that we're currently working on is to make sure that we are getting out and talking to senior citizens, because that is coming up again this year, to make sure that those that are eligible are under the program, and we want to make sure that they do get full advantage of taking benefits of which they are entitled by
Yeah, because
law.
you see a lot of seniors that are not educated, they miss out on that.
That's true. And
so you're trying to prevent from...
Exactly.
Yes.
And that's one of the things I've been personally very concerned about, because I want people that have lived in their home for many, many, many years, and if they are low income, that they continue to retain.
Of course.
ability.
Well, Lloyd, thank you again so much for coming into studio and sharing what's happening over at the Assessor's office with my listeners, and look forward to having you back in studio probably in another couple months or so.
Okay, it's great. It's always fun to be with you, Tina.
Thank you, Lloyd. Okay. Coming up next in the Money Hour, since 1913, when the states ratified the 16th Amendment that gave Congress the authority to collect a federal income tax. People who work in the United States have given part of their paychecks each year to the federal government. It's kind of nice to have a representation from that arena, and I do in studio Greg Nunn Principal at Gregory S Nunn Company, right here after this short break on 570 KVI.
Are you behind on your mortgage payments and unsure about the road ahead? Magnum Law Group helps families just like yours navigate through the foreclosure avoidance process. Are you underwater on your home and unsure what to do? Magnum Law Group will help you understand your options. Are you facing foreclosure and need to stop a trustee sale? Magnum Law Group has success in doing this and may be able to help you too. If you're tired of dealing with the banks and getting turned down for loan modification, Magnum Law Group will take on the banks for you and lead you through the process for the best possible outcome. They lead the competition with superior knowledge and expertise.
This is Craig from Magnum. You can reach us at 425-605-6393 or at www.magnumlawgroup.com. See you at the next seminar.
Kelly and Kian understand the urgency of shelter both in their business and in their community. They're here for you not only as exceptional real estate brokers, but also advocates for affordable housing and ending homelessness. They've worked with first-time homebuyers, relocation companies, sellers, and are certified negotiating experts. They're also tireless advocates of Windermere Foundation. Kelly and Kian encapsulate their services in one simple phrase: a home for you, a home for all.
Hi, this is Kian Pornour.
And this is Kelly Pornour, and you can reach us at 206-949-9302 or on our website at kellyandkian.com. That number again is 206-949-9302.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KVI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell. I'm dedicated to my listeners, providing you with the tools needed to make informed decisions on all matters that affect your money. In studio right now, my own personal CPA for my regular listeners. You guys have all heard Greg before. He's been in many, many times. Greg Nunn Principal at Gregory S Nunn Company. Every year, Americans start counting down to April 15th when their income taxes are due. And what do you need to know to help in this process to be a little more prepared? And hopefully, ultimately, preparation means paying less taxes, right, Greg?
That is correct.
That's why I like to have him in studio, to make sure that we're all up to date on what we need to be when it comes to your taxes. Certified public accountant and, again, my own personal CPA. Greg has been practicing for nearly 30 years. He's also a certified tax resolution specialist, the only one in the greater Seattle Eastside area. His practice is located in Redmond, Washington, with the focus of being tax return preparation, tax planning, and tax problem resolution. Greg was recently awarded top practitioner by the American Society of Tax Problem Solvers. So, Greg, let's just really get into it. Is there a good time to review your 2013 taxes to determine if there are some tax planning strategies to mitigate income taxes, and what can a taxpayer do?
Yeah, I tell you, this is one of the best times of the year to start doing some tax planning, to think of what you might have in mind for what your taxes will be for 2013. And the general rule of thumb is, but it doesn't apply to everybody, and that is you try to defer income and accelerate deductions to help reduce the amount of your taxable income. However, keep in mind that doesn't work for everybody. Sometimes you actually want to do it the other way around, depending upon your taxable income situation.
So taxes are kind of like mortgage. I mean, you really need to have your own specific situation analyzed and looked at. We're just trying to give an overview here to listeners on things to watch for.
Tina, that is so true. I mean, everyone's situation is unique. It's kind of like going to the doctor. I mean, we all have a human body, but things can be quite unique depending upon your own situation.
And our bodies change.
Yes, they change.
How we strategize on our taxes changes as well.
Very much so.
And I know I can speak from some experience there, Greg. So what are some ways to defer taxable income?
Well, some of the things one might consider is if you're in an environment whereby you are getting a bonus, talk to your employer and see if you can defer that until 2014.
Okay.
And that's one way. Another thing to consider is debt cancellation income. That is, ordinarily when a person is forgiven debt, it becomes taxable income, depending upon their situation.
This could talk about a lot of people with mortgages.
Exactly. Now, if you have a mortgage and you're being foreclosed or short sale or that type of thing, that kind of debt cancellation now is best to happen this year in 2013. Because on December 31st, 2013, the exemption of $2 million that a person can have on their mortgage as far as debt cancellation not being taxable expires.
That's if they don't extend it again. Okay.
And in our...
So why risk?
Why risk?
Yeah.
And in my opinion, in our current legislative environment back in D.C., don't count on anything.
Okay. So any other deferred tax?
Those are the
big ones.
Those are the two big ones.
Okay. And what are some ways to accelerate tax deductions?
There are several ways to accelerate tax deductions, and most people have more control over that than they do their income.
Okay.
And some of those items we'll be discussing later with your questions. But there's just a couple things I want to throw in here kind of parenthetically. One is in relation to businesses, that there's what's called a Section 179 deduction, meaning you buy new assets, equipment, that type of thing, and you can write that off 100% in the year that you buy it.
Okay.
Right now, that maximum amount of write-off is $500,000 in 2013. If Congress does nothing, then it expires. In 2014, that maximum amount drops to $25,000.
Wow.
So it's huge for people that have a small business. Just gigantic.
You know, I always tell my clients when I'm talking with them, Greg, if I always ask if they have a CPA, and I don't care where you're at in the process, owning a business or, a W-2 employee, you really need to consult with a CPA, pay a little bit of money to have someone do your taxes, because it is so overwhelming with everything that's going on. And there's so many opportunities to miss out on a lot of money by making that wrong move. So if you're listening and you have any questions on what you're hearing for Greg, pick up the phone, 1-888-987-0570. Again, it's 1-888-987-0570. You can talk with Greg directly, set up a time to meet with him and find out, where you're at and some strategic areas and things that you need to work on to make sure you're not going to overpay in your taxes. So Greg, what are some tax planning strategies to consider regarding medical expenses deductions? Because this is, a lot of people have this on their mind right now.
The whole medical arena is certainly gained a lot of people's attention with the Obamacare.
Mm-hmm.
The deduction available for medical expenses has limitations. It used to be you could deduct 7.5% of the amount above your adjusted gross income.
Okay.
For 2013, it's now 10%, unless you're 65 or older. So if you have medical bills out there and you want to be able to deduct those this year and you haven't paid them yet, consider putting them on a credit card. Now, I say that with caution.
Of course.
Especially if you're a person that has challenges with using your credit cards. Mm-hmm. But by charging it, that creates the time on which you can make the deduction.
Wow, what a creative solution there, Greg. What are other ways to reduce taxes related to medical expenses?
Well, there's two additional ones among others, but two primary ones, and that's if you are working for an employer that has a medical reimbursement program.
Okay.
you can set aside $2,500 to go into that medical reimbursement program. Now, it used to be $5,000, but again, like the itemized deduction limitation increasing, the amount that you can put into a medical reimbursement plan has decreased. However, if you work for an employer that has that kind of plan, it's still a fantastic way to put aside some money that is not taxed that you can utilize to reimburse yourself for medical expenses. However, be sure you get all of that money back that you put into that plan, because if you have any money in at the end of the year, it's gone.
It's gone. And I know I don't have to ask this, Greg, but Dave is already strategizing with you, correct? He's not procrastinating on our personal taxes.
I'll take the fifth on that.
Okay.
Okay.
Go ahead, Greg.
Another one is if you have a health savings account type of medical plan, you can contribute to, if you're an individual, up to $2,750, and if you're a family of $5,450. Again, this is for a high deductible medical plan that qualifies for the health savings account. These accounts, you don't lose the money. That is, the money goes in there, it's yours.
Yep.
And so you can actually accumulate, if you don't have a lot of medical expenses, quite a bit of money in there, and it works similar to an IRA as far as how the money sits there, how you invest it, and that type of thing. But if you haven't done it yet for 2013 and you have medical expenses that you could get reimbursed for, hey, just put the money in and then reimburse yourself and take the money out, and you just created a nice tax deduction.
Nice. Greg, what about the sales tax deduction? What's going to happen with it?
Our beloved sales tax deduction here in the state of Washington, we all like, because we have no income tax. Most states do.
Okay.
And so part of the itemized deductions are the deductibility of state income taxes, but the sales tax has been kind of a special, unique little animal. And it is right now slated to expire at the end of this year. So how do you deduct your sales tax? Well, there's the table amount, and you can do actual, or you can use a table plus big item purchases like a boat, a vehicle, aircraft, substantial home renovation. So if you have one of these big ticket items that you may be considering, look at purchasing that and getting the deduction in 2013, because 2014 it may be gone. However, alternative minimum tax can get your little butt. I guess we have to probably.
No, that's okay.
Okay,
it's all right, Greg.
Can nip you when it relates to this tax deduction.
And it does with mortgage interest as well. I always tell clients, you know, I'm going to give you an idea of what I think the interest deduction is going to be on your mortgage, because it's substantial and it's a huge amount of money. But you need to really make sure that you've got enough to where you're not doing the what'd you call that again, Greg?
Alternative minimum tax.
Yeah, because if you do, then you're not seeing any benefit from that at all. So really just making sure that you understand how that's going to work. So Greg, what about charitable contributions? How can Dave and I take advantage of this for taxes?
This is, to me, one of the easiest deductions available, and that's charitable contributions. Not only can you benefit yourself for the tax deduction, but you're benefiting the community or an organization that you support. And I'm going to talk specifically around non-cash contributions. I mean, go through your house, look for items that you don't need or don't want or don't use, and look at contributing those to your favorite charity.
Okay.
This is a fantastic, simple tax deduction. Now, the key is document. You got to document these contributions of non-cash stuff. One way to do it is to take pics of it, save the pics of what you've contributed. And then there's substantiation requirements. Again, the tax code is full of so many little details and nits that if you don't do what it says and you then get audited by the IRS will say, sorry, we're denying that deduction because you don't have the proper substantiation. So that's the way it is with these non-cash contributions. There's different levels of substantiation requirements.
So, Greg, what is with all these new taxes that we keep hearing about?
These new taxes can be very confusing. We're hearing about some of them, and the impetus for all of these new taxes is the Affordable Care Act, the ACA Act. And one of those is a 3.8% surtax on unearned income for high-income people. What's unearned income?
Well, yeah, what is unearned?
Basically, income that you get that you didn't work for. Although most people, even when they make investments, are working to get that money.
Oh,
got
it. Yes,
yes. It's kind of like a job versus
Yep.
putting money in the stock market and getting paid dividends and that type of thing. So this surtax is on unearned income, like dividends, interest, and that type of thing, up and above what it's already been taxed at the regular rates. And this is for high-income people. Also, there's a 0.9% Medicare tax for high-income earners. So these are two big taxes for high-income people that I tell you, it's really going to surprise a bunch of people.
So, Greg, let's talk about capital gains. And this is a direct impact to myself, our guests that are coming up next in studio in the real estate, community. I mean, this can be a really, really big deal when we're talking about capital gain increases. So what's happening? What do we need to watch out here?
Yeah, long-term capital gains. This is one of the nice areas, if you will, that people have where they can earn income and have it taxed at a lower rate than what their tax bracket is. Mm-hmm. Long-term capital gains means generally an investment that you've held in excess of 1 year, like, maybe rental property or something of that nature. Mm-hmm. But the tax rates vary from all the way to 0% to 20%. So it can be a substantial impact on your taxes. So get some input and some tax planning. That's my best recommendation.
Great advice, Greg. Again, pick up the phone, give my show a call, 1-888-987-0570. Again, it's 1-888-987-0570. You can talk directly with my own personal CPA, Greg, that was in studio here right now, which we'll definitely have back. I think we've got you scheduled for February, Greg, right?
That's correct, and happy belated Thanksgiving.
Coming up next in the Money Hour, here to discuss what's happening in today's real estate market and how consumers are reacting to the current environment. Kian and Kelly Pornour with Windermere Real Estate right here on 570 KBI after the short break.
Free electricity from your roof? It's possible with solar energy. Here's Amy from Solterra Systems.
There's never been a better time to install solar in Washington, and yes, we do get enough sun. Incentives cover over 50% of the installation cost, and zero down financing is available. Enjoy watching your meter run backwards this summer by installing solar now.
Go to useyourroof.com to find out how easy it can be. That's useyourroof.com, or call 800-865-9005 to get your free site assessment from Solterra Systems.
Kelly and Kian understand the urgency of shelter both in their business and in their community. They're here for you not only as exceptional real estate brokers, but also advocates for affordable housing and ending homelessness. They've worked with first-time homebuyers, relocation companies, sellers, and are certified negotiating experts. They're also tireless advocates of Windermere Foundation. Kelly and Kian encapsulate their services in one simple phrase: a home for you, a home for all.
Hi, this is Kian Pornour.
And this is Kelly Pornour, and you can reach us at 206-949-9302 or on our website at kellyandkian.com. That number again is 206-949-9302.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KBI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell. I'm empowering our community, providing you with opportunities and the solutions when it comes to your money. In studio right now, Kian and Kelly Pornour with Windermere Real Estate. Since the recession hit in late 2008, the real estate market has changed dramatically. And I'm excited for our conversation today with local real estate market experts and in our market selling real estate on a day in and day out basis. Kelly and Kian, thank you so much. First time in studio here with me.
Yeah, thank you for having us.
Thank you for having us, yes.
Kian and Kelly, both licensed real estate agents with the Windermere Real Estate. Kian has lived in Seattle for 27 years, where he's been an activist in its social and charitable scene. He has been relentless advocate for issues of homelessness and housing for the poor. Kelly is a Seattle native. For a number of years, she taught at some of the most challenging high schools, earning many accolades from both her students and peers. And both Kian and Kelly stress a client-centered considered approach to educate their clients about selling and buying process. Most of their business in North Seattle, but they go anywhere that their clients' referrals take them and want to do what it takes to get the job well done. So thank you again, both of you, for being here today. And I'm really excited to talk about the local real estate market. So what's happening right now in local real estate in our market?
The inventory is increasing at a slow pace. So we are seeing that the inventory is definitely going up. We are seeing the third quarter was very good. Entering October, the numbers are increasing. But we still have geographical pockets that are getting multiple offers. So it doesn't matter how much inventory you're bringing in, you're still getting people wanting to bid up the price.
Sure.
Because they're still short and the demand is still very, very high. But traditionally, this is a slow time of the year, so not a lot of people are focusing on buying necessarily. And the growth in several counties is still very strong, like King County and Snohomish County. Yeah.
And, on that note, Kian, I want to ask you with buying in the holidays, because this is, it's kind of there's less inventory, so
Right.
there's less properties available, but at the same time, you're not necessarily having those multiple offers. Are you guys advising clients to take advantage of the holidays and purchasing, or to wait until getting through the holidays when there's more inventory? Or does it really depend on what they're looking for in their market?
It depends what they're looking for. If something has been sitting on the market, usually after November 15th, things slow down quite a bit. So you can take advantage of that for buying.
Sure.
And actually bring the price down even a little bit lower and negotiate it down.
Yeah.
But again, it depends on specific geography, and it depends on the demand, and it depends on a specific client and what they are looking for.
Yeah, I think
makes total sense.
Yeah, and for buyers, I think that we're definitely recommending that they move forward if they want to purchase, if they find something. For listings, we're definitely recommending January, after the first of the year. Right now, unless they have to sell,
sure,
we'll wait till January.
And I'm glad and I was asking for it on the buyer side because I'm doing the mortgages, and I am always like, well, it's anybody that's selling right now has to be desperate to list. So I'm glad you clarified that, Kelly. So there are a lot of different trends that we know to watch for that are indicators on the direction of our real estate market. And one of them is to watch foreign buyers and coming into our market. We're seeing a lot of this right now, right?
Yes.
And what is this saying about our market? What's happening, Kelly?
Well, we're seeing a lot of foreign investors because I think in the global market, people aren't able to get enough interest on their money that they have in savings. And so they're investing it in the Seattle real estate market and probably the West Coast in cash. They're just investing cash in, and then they rent it out. So they'll buy a house for cash, $400,000, rent it out for $2,200 a month. And that's good return on your money. Especially if your family is helping manage the rental, then you don't have any of those costs either.
Sure.
So, yeah. That's happening.
And we're seeing on the lending side, we've got foreign national programs that are coming back in. Banks are starting to lend more. They're getting more comfortable, which is obvious an indicator of what the confidence in the real estate market. But so there's a lot of these foreign investors that actually can come in and get a mortgage now and not have to do cash if they don't want to.
Correct.
So which is encouraging a lot more of that as well. Now, another indicator are the cash buyers. What percentage of our market are cash buyers, and what is this saying for our local market?
It is really difficult to say exactly how many are cash buyers, but at least for us, we have done 50 transactions this year.
Okay.
And personally, on the buying side, we have done about 5 of those transactions has been cash, so about 10%. But every single bid that we have been involved with, it has cash. That means that close to like about 40 or 45 of these transactions, somebody came in with cash and actually wanted to compete. That's
a really good point, because not necessarily that their offer was accepted, but they were just one of the players in the market.
Correct.
And I'm glad you brought that up. And if you heard how many buyers that they've actually worked with and how many transactions they've closed, that's why they're in studio here today. Pick up the phone and give my show a call, 1-888-987-0570. Again, 1-888-987-0570. If you're looking at selling or buying, the best way to maximize your investment and to get the best deal and do it the right way and not lose money is to work with established real estate experts. And definitely that's what I have in studio today. And do you guys see for 2014, being the experts that you are, I know you've got a little crystal ball over there that you can say exactly what you think the market's going to do.
Sure.
What is your best guess for 2014? What are we seeing?
All the things tend to direct to slowing down the market. But by slowing down, we are not talking about market dropping off like something that it did in 2008.
So we're not talking about a bubble.
No, we are not talking about a bubble, but we are talking about slowing down. We are talking about the rate of appreciation and the incline in prices in current market. That's what we are talking about. So the prices is not going to go up as fast. It's going to be a little bit slower to keep pace with actually job market and the index of affordability, what people can afford. So we are not necessarily seeing a bubble, but we want the rate of appreciation actually to be somewhere between 3 to 6%.
Sure.
We don't want it to be double digits because it's not sustainable.
Yeah. And what about thinking out of the box? I know that there's some advice that, especially in this market, you have to be doing a little thinking out of the box. What are you advising your clients?
Well, the market is much different now than it was even in 2006 because of all the cash offers and the competition and multiple offers. And so we had a number of clients this year, that even one that had cash and could close in 2 weeks. But there was also another cash buyer, or somebody who had 50% down, was bidding up higher. So our cash buyers would possibly lose on that. So what we did is we ended up writing letters to different neighborhoods that they wanted to live in. And so we ended up doing a number of off-market sales this year from that. So
off-market sales, if you're listening, I mean, this is what it takes. Talk about thinking out of the box. These are properties. They're not listed. They're just, they're sending out a letter on your behalf in the homes that you might want. And a lot of sellers probably still are not even realizing the value that's come back in their property, because unless you're actually in the market like you and I are, and you're doing this every day, or you're actually thinking of buying and selling, you may not really even understand the value that your property is. So what a great creative way to think out of the box and to get your clients into homes.
Yeah, it's been really great for the people that haven't been able to win in multiple offers at 10% down or something.
Yes.
The house.
Yeah, which is we see that every day. So, Kian, I know you just attended a conference from Zillow. They brought in an economist, and what are some of the highlights from that conference?
Well, it was very interesting. That was the focus of the summit. The economist came on and was talking about what is the percentage of houses being under the water with their mortgage in Seattle.
Okay.
And last year was very close to about 33%. And right now it has dropped to almost 17.2%.
Oh, I was going to say 33%. Wow, still. Okay.
Yeah, one of three houses were actually under... It was under the water.
In 2012.
In 2012.
Okay.
But this year, that number has changed to about 18%.
Okay.
So a lot of people who couldn't sell, they're actually coming to the line to be able to sell now.
Yeah.
So that's one reason we are seeing increased inventory probably within the next 6 months to a year.
Okay.
And that will definitely take the competition out of the picture.
Sure.
And it would balance the market a little bit better.
So when you're talking about next year, looking at the appreciation, not being in those double digits, more in a single and realistic, there's the reason why, because the inventory is coming back a little bit.
That is correct. I mean, they were projecting actually the appreciation from September 2013 to September 2014 is going to be 8.1%.
Got it.
And this year was 15% for Seattle area.
Yes. Wow. And what about Zillow's report? I think it's important to mention the difference, when we're talking Zillow versus Case-Shiller report. How are they reporting differently?
As far as trends goes, whenever you're talking about Case-Shiller, it clumps all the metro areas together. So when you're talking about Seattle Metro, you're talking about Everett, you're talking about Renton, you're talking about Tacoma, you're talking about Bellevue. So all these things, there's a huge difference.
Yes.
I mean, you have got so many distressed inventory in some of those markets that brings the prices actually down at the affordability index. I think Zillow is a little bit more geographically specific. So it talks about surrounding metro areas, but it can actually separate them. So it would be Seattle only or Bellevue only. And that gives you actually a little bit more accurate and specific numbers for the cities. They also go with a specific house and its neighborhood, and the numbers even will become more precise than Case-Shiller.
Yeah, so really a better look to look at when you're trying to dial in specifically on the areas.
Correct. It's a metric. So as a metric,
Makes
I like it
sense.
a lot better than Case-Shiller.
Yeah, okay. And let's talk a little bit on rents, because we've seen a lot of things happening in the rental market. And I know that, Kelly, you've got a little story I'd like you to share with my listeners as well on rent. But what do you see happening, and what does this mean for the market? What do you see continuing happening with our rents?
So there's so much demand for housing, as we've seen in the last year with the multiple offers and buying, and also demand for rentals. And the rents are there's no rental cap in Seattle. So landlords can raise the rent as much as they want. I think they have to give 60 days notice if it's going to be more than 10%, 30 days notice if it's 10% or less. So what's happening is the rents are going up quite a bit, and because of the demand for housing. So, for example, one condo in Ballard that's 500 square feet was being rented out for $1,150, and I suggested why don't they put it on for $1,400, and they were able to rent it that week for $1,400.
Wow!
So that was after the lease had, the other lease had ended.
Yeah. So two things from that. I mean, you really need to know what's happening in the market if you're out there and you have a rental property. And for those of you that are renting, you really need to look at the opportunities of getting into the real estate market, because that's a really scary position to be in as a renter.
Yes.
And a lot of people that are renting, unless you're coming in on a short term and working for Microsoft or something, but most people that are renting, a lot of those high percentage they feel that that's what they need to do to be able to afford. And there's so many opportunities to be able to get into housing and get that payment fixed for you instead of being at risk of not being able to afford to rent in your neighborhood anymore. Let's talk a little bit about interest rates. I mean, that's my arena, and we saw the first increase starting in the interest rates where it was pretty shocking was in May. And what we saw the consumers doing was actually the opposite. I thought when the interest rates went up, the real estate market was going to actually slow down, but it did the exact opposite. The market buyers all of a sudden started coming off the fence because they were getting nervous about the interest rates continuing. Now we're seeing a lot of volatility in the interest rate market as well. What are you seeing your clients and buyers? How are they reacting?
I think that you're looking the market intently, just looking at indicators to see that if the mortgage rates are going up or not. The biggest thing that you're looking at is the QE2, quantitative easing for the federal government. They're buying $80 billion worth of mortgage-backed securities here in order to keep all the interest rates artificially low. Imagine if that money is not being pumped in to the economy. What is going to happen then? Is it going to stay the same? Is the interest rates going to go up? What if the economy heats up a little bit more? Interest rates goes up again. So they're watching all of those indicators, and they are very intent at watching it.
Of course. So call to action. Pick up the phone and give the show a call right now, 1-888-987-0570. I am wrapping up, but you can still get in contact with any of my guests that were in studio. Again, 1-888-987-0570 or on themoneyhour.com. Kian and Kelly, thank you so much for spending time in studio and your expertise with my listeners today.
Thanks so much for having us.
Thank you so much for having us.
And this is your host and mortgage expert, Tina Mitchell, signing off for the day. Everyone enjoy the rest of your Sunday. Thank you so much for being here. I really appreciate your time listening to the show. And I'll be back next Sunday, same place, same time, 11 o'clock, right here on 570 KVI.
The preceding program was paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.